Hello, everyone, and welcome to 360 Retirement. I'm your host, Paul Gebhard, with my guest today, Keith Fong of Capstone Planning. Welcome to the program, Keith.
No, it's great to be here, Paul.
Yeah, it's good to have you. How you been? Tell me what's going on in your world.
Yeah, it's going really well. We're expanding, so that's really exciting.
Yeah.
We're in the process of actually constructing a 6,400 square foot building,
Wow.
which is going to really allow us to expand the services and basically our reach to our clients. So very excited about that.
Yeah, definitely helps you to better serve them, right?
Absolutely.
So I wanted to start off asking you, based on your expansion, you guys have a holistic approach to planning, right?
Yeah, so we're a family-based business, and we take a very holistic approach.
Okay.
Because too often we see that people come in and they have like some investments here with this
Yeah.
advisor and some investments over here and maybe like a life insurance policy or an annuity, and it's just kind of array of different things. It's like, how can we put that together to make a cohesive plan that's not only going to cover you, on the portfolio side, but also on the taxes, on the estate planning, and also on the legacy to make sure that everything's covered.
So kind of scattered around like a financial junk drawer, you're basically able to help everybody accumulate things in one synergistic direction.
That's exactly right.
I love it. I love it because I definitely am one. I can witness the financial junk drawer. You get stuff everywhere. I was going to ask you, a lot of folks want to know, okay, I've been accumulating all these years. I'm getting closer to retirement. How do I know when I need to go from, say, accumulation to distribution? And is it something, Keith, I do like all at once? What would you say to the viewer out there that's in that mindset, getting ready for retirement?
Yeah, and it's a completely different mindset. So during the accumulation years, you're basically just trying to put away as much as possible. And then when we actually have to make that switch to actually give ourselves that permission slip to go ahead and spend that we saved, it can be a very difficult decision and very difficult time. It's a bell that can be kind of unrung because you can always go back to work.
Right.
But that can also be a very difficult decision to do. And one of the things that we really try to emphasize on is, preparing for retirement, it's not necessarily 100% a financial decision. Obviously, you want to make sure you're never going to run out of money.
Right.
But just having to look inside, say, am I ready to retire? Because if you've been at a company for 30, 40 years, it becomes part of you. That's who, the identity that you align yourself with can be with that job or with that profession. And then really setting up the goals on how retirement looks. Like, is it going to be a lot of travel? Is it going to be, are you going to be golfing?
Yeah.
How are you going to kind of fill those days?
You hit my hot button. Let's do some golfing. That's always good. Yeah. So you're basically, it really depends on the individual and how much they're going to transition. Is it going to be an instant retirement or more of a gradual thing? Is that?
Yeah, and a lot of folks kind of test drive it a little bit. They'll go down to part-time.
Right.
And then they'll start to supplement with IRAs or 401ks just for lifestyle before making that complete switch. Because again, sometimes it's just having those water cooler conversations at the office and things like that I think, on the surface, go unseen, that are really kind of important to you.
Right. Well, it sounds to me like a big part of this would be making sure that you're constantly reviewing your plan, making sure that it's up to date with what your goals are.
Yeah, and I think one of the most important things is to actually have a written plan. Understanding that it's going to be flexible, it's going to be a breathing document, there's going to be adjustments, life happens, goals change.
Right.
You have kids, grandkids, divorces. We know that life happens.
Sure.
So being able to adjust for those, but having that written plan and having an idea where you want it to be, I think is critically important. Really before, I'd say 5 to 10 years is really when you want to have that solid plan in place.
Really? So that 5 to 10 year mark is basically where you're looking?
And then, or if you currently don't have a plan, getting that plan in retirement. Because one thing that we really focus on is tax efficiency. Because we know sooner or later we're going to have to start taking distributions from those qualified accounts, those IRAs and 401ks and 403bs, known as required minimum distributions that start at age 72. So planning for that and making sure that everything's tax efficient as possible is so important. I think especially in our world today where in all likelihood, most likely taxes are going to be going higher rather than lower.
Yeah.
In fact, as of right now, if Congress does nothing, which in my opinion, they're pretty good at doing nothing,
Yes.
The tax laws expire in 2025 for individuals and families. So they go back to the way they were. So for a lot of Americans, that means it's going to be a tax increase. So the question is, what can we do now to prepare for that?
Yeah, that's good. I mean, I'm going to go there because you went there. You brought up taxes. And I know that's a topic that a lot of folks, avoid for whatever reason. Maybe it's because they don't really enjoy paying taxes. I understand that. They're not sure a lot of times where their taxes are going, right?
Right.
And I know there's a lot of fear and trepidation kind of around taxes, thinking, okay, I don't really have a whole lot of options. But that's not really the truth, right?
Yeah, there's a lot of options. I think one of the biggest things, and a lot of advisors don't like to talk about taxes, which to me, that's almost like a financial malpractice,
Yeah,
not being
right.
able to talk about taxes.
Yeah, I mean, how can you not have a tax discussion when it comes to
Because so many decisions, such as when to take Social Security,
Yeah.
how that's calculated with provisional income, we're going to have to start taking out the RMDs, talking about Roth conversions, things of that nature are so important in retirement, and to really make sure your plan is tax efficient. Because at the end of the day, it's not what you make, but it's what you take. So I think it's unfortunate that more folks don't or aren't willing to talk about taxes because they're so important.
Yeah.
And that really is the importance of having that holistic plan to make sure that we're not only touching on portfolio risk and things of that nature, but also talking about the taxes and the estate planning effects of those decisions.
Yeah. I wonder sometimes if folks understand that there are those options available just because, listen, we get told a lot, don't mess with the IRS, right? Pay your taxes. And we all pretty much stand up and we file them every year. But that's, in my estimation, that's really tax preparation. But it's very different, a tax plan versus tax preparation,
absolutely.
right?
Yeah. So, I mean, if you take a look at what is, tax preparation, that's all a history, right?
Right.
You can't do anything when you're preparing your taxes.
Right.
For the most part, very limited options with IRA contributions or something like that. But in general, it's all done. It says, give it to your accountant or your CPA or tax preparer. It's just a history for the last year. Where tax planning, we're going to take a look at what is our taxes going to look like next year, the year after that, and then creating a cohesive plan around that, but then also having the flexibility and understanding that tax laws have a tendency to occasionally change. So planning for those, what if we have higher interest rates and things like that?
Good stuff. Good stuff. So when folks, one of the things on taxes, I want to, one more time, I know we're talking a lot about it, but I just think it's really important for folks to really kind of understand that taxes are a big part of their plan. And like you said, a lot of folks are, planners might be having them lead that discussion out. They're not talking about that as much as they should be. But it can make a major impact to their overall nest egg, right, Keith?
It really can, yeah. And even a lot of accountants and CPAs, they more focus on that tax preparation. The vast majority aren't doing proactive tax planning.
Right.
And that's something that we really focus on. So usually we meet with someone, we'll say, hey, bring a year or two of tax returns just so we can see exactly where you're at. And then also we use that to do a comprehensive analysis to say, hey, there's an opportunity here, or we might have an opportunity here. If we have a large IRA, we say, hey, we might want to convert this now because taxes are historically very low, especially if we compare it to, 20, 30 years ago when taxes were the highest bracket was extremely high. So, and again, with taking on a lot of national debt, like $7 trillion in the last year or so here, at some time someone's going to have to foot that bill. And if history is any tendency for the future, it's probably going to be us.
Yeah, it's us. It's the taxpayer. I'd like to continue a little bit on that, some tax strategies, some ideas that you talked about, some of those key things like conversions. But we're going to take a break here in a second. But I understand you have an offer for the viewer today.
Yeah, so today for the first 10 callers, what we're going to offer is a complete 360 holistic plan. And inside this plan, what we're also going to do is stress test that plan. So we're going to take a look at what if you live a very long time, or what if a spouse passes early? What if you get sick in retirement? We're going to take a look at all those scenarios and actually give you a written plan, or we'll give you a second opinion on your existing plan. So call now, 888-222-4498.
And again, that's complimentary.
Complimentary.
Phenomenal. Take advantage of that, right? It's a complimentary plan designed around you, about what your goals are. When do you want to retire? Who do you want to retire with? Have that freedom. The freedom. That's the key. 888-222-4498. We got to take a quick break. We'll be right back after these messages.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back to 360 Retirement. I'm your host, Paul Gephardt, with my guest, Keith Wiltfong of Capstone Planning. Okay, listen, so you kind of teased us a little bit with some good information there on the tax stuff about certain strategies they can do. And I heard you mention a few times about like Roth conversions being
Yes,
one
yeah.
of them. Can you explain a little bit what a Roth conversion is and how someone can use that in their tax strategy?
Right, yeah, and I think it's important really to work closely with an advisor or an accountant when implementing a lot of these strategies. But at really at a high level, it's taking money that is going to be taxed at some point in time. Either you're going to pay the tax on it or your beneficiaries are going to pay the tax on it.
Yeah.
And then turning that, basically paying a tax on it, and then never paying the tax on it again. The big benefit is that because it's never taxed again, all that growth inside a Roth IRA is 100% tax-free.
Wow.
So what we'll do is we'll develop, let's say, a Roth conversion strategy, and let's just say we want to convert, say, 20,000 of an IRA this year.
Yeah.
And then we'll basically use a mix of saying, hey, we want to do the 20,000 because that gets us to a certain bracket, a bracket type, what's called bracket bumping strategy.
Okay.
And then we'll have an overlay of what's called a market timing strategy. And how this works is, let's just say we have a bucket out here that has a little bit more risk and a little bit more movement
Yeah.
in it, right?
Yeah,
like
yeah.
an equity or stock type portfolio.
Sure.
And we have a year like 2020, where the market goes down kind of peak to trough 37%.
Right.
So when the market starts to fall, say in February and in March, we're going to take that IRA chunk, right? And then what we're going to do is actually, as it goes down, think of like a slinky. It's coming
Sure.
down.
Yeah, yeah.
We're going to take it, convert it to a Roth IRA, and then when it comes back up, all this growth now is 100% tax-free. And it's
Completely.
tax-free forever.
Wow.
So we'll have a strategy because we know at some point in time, so for example, at age 72, which is a required minimum distribution age, you have to start taking that out. And just kind of being, that type A control, I want to make sure that we have control over the taxes and not Uncle Sam.
I like that. I think
So-
the viewers will like that, right? They want to be in control of this, right?
Absolutely.
I like that.
So it's almost kind of divesting Uncle Sam's interest in your investments.
Yeah, that's good. Limiting. what he gets,
Limiting,
which
yeah.
is good. More money in our pockets. That would be good, right?
Right.
So basically, it's a lot like a prepayment of
Yeah.
taxes while we're getting a break now,
Mhm.
as opposed to maybe tax increases in the future.
Correct. Yeah, what it really does is it insulates at least a portion of the portfolio or the mix against government policy risk. Because let's face it, we don't know what the
We don't.
government's going to do from day to day.
Right.
Administrations come in, administrations go
Right.
out. It flips back and forth every so many years.
Right.
And
right.
policies do change. So I think retirement's all about risk management.
Yeah, absolutely.
So if we can take out one of those risks by converting some IRAs to Roth IRAs, we're now limiting our exposure kind of that risk of government policy.
Wow, that's
And-
phenomenal.
And we do that in a holistic manner. So that's just one piece of it, because it's also very important, to make decent returns on the investment. Because another risk that I, potentially see in the future is inflation risk, where like we kind of saw in the 80s, where interest rates were, 10, 13, 14, 15%.
Yeah.
Massive.
Outrageous. Yeah.
So if we see that, the risk of having, say, too much cash in the bank with right now pathetic interest rates, every single year your purchasing power actually goes down. You're actually losing money by just keeping it in the bank.
Yeah.
So kind of being cognizant of that and making sure that we can avoid, basically want to keep up with inflation, especially in retirement. And that kind of leads to, if you look at things kind of inflate in cost, at different rates. And I think one thing that people overlook sometimes is the cost of healthcare inside retirement.
I couldn't agree
'Cause
more.
that typically you're looking at 6, 7, 8% per year.
Yeah.
So not accounting for that type of inflation inside the retirement mix can be a real big mistake.
No, I love that you shared that with folks. You know, the actual inflation of the healthcare cost.
Yes.
I know everybody thinks it's one of the biggest questions folks have is, you know, their biggest concern to their nest egg is a catastrophe related to the healthcare issue. But sometimes they don't think about the inflationary risk that happens slowly over time, right?
Right.
And that's a wonderful point. I'm glad you shared that with everyone. I wanted to ask you some of the components around what we're talking about, tax strategies, the impacts of inflation. This all gets driven back to income. That's what
Yes.
folks, I think, are thinking out there. Okay, so what can we do as far as income, that income gap, planning for that inflation? What things can we do to plan on a steady stream of income so that we have that peace of mind?
Yeah, and I think a real big thing is to get a solid income floor.
Mm.
So if you're going from working and you're going to be in retirement,
Yeah,
realizing that retirement's 20, 30, maybe even 40 years
or
of,
longer nowadays, I mean, right, with medical.
right, of unemployment.
Yeah.
So
Right.
so you have to make sure where we have those sources coming in as far as it's Social Security, is it a pension, is it from an investment portfolio, is it from something like real estate? So I think having a diversification of income sources, you know, is it coming from something like guaranteed like annuity where you're going to get those payments each and every month? So having that diversified, but also having a very solid base. The biggest thing that we try to make sure is, hey, we want to make sure that our base is covered. Our monthly living expenses are covered in solid, guaranteed type income sources. And then the rest of it can be more discretionary as far as maybe some of the travel. Although I think some of my clients would argue that travel is a necessity.
Yeah,
might
of
put
course.
that in that bucket,
Yeah,
right?
it's for our sanity.
And then also, I think one thing that gets overlooked, I think too often, you know, advisors kind of look at, hey, this is everything goes rosy, you know, this works out perfect. But then if a spouse unexpectedly passes,
Yeah.
which we've seen firsthand, having that stress test in place to say, hey, this is how we're going to replace that income. This is how we're going to make sure that we're still going to be okay. If it's maybe taking 100% survivorship on a pension or using a Social Security strategy that is going to basically maximize it for the higher earning spouse to make sure the impact is less. Because at the end of the day, you know, when you're, another thing I think people fail to realize is how taxes are affected. So when you're married, you have married filing jointly, right? A much better tax situation than single. So now once a spouse passes, not only do you have all the decreased potentials in income, but also you have an increase in taxes. So it's really kind of a double whammy. So
yeah.
preparing and stress testing that, we're always going to, you know, hope for the best, but if we plan for the worst,
Yeah.
I think we're going to be in a lot better spot.
I like that. You mentioned the stress testing. So your family firm has tools available to
Yes.
folks to run a lot of different scenarios, correct?
Yeah, so one thing we kind of pride ourselves on is we do something what's called a Monte Carlo simulation.
Okay.
Where it runs thousands of different sequence of returns for markets and different things. Because let's face it, we don't know what the market's going to do tomorrow.
No.
You know, trying to guess what it'd do over the next 10, 20 years,
Yeah.
very, very difficult.
Right.
And then what it does is it gives us a probability of success. Say, hey, you know, giving these scenarios, this plan, you know, is successful 90% of the time, or it's successful 80% of the time. And people have different, you know, limits where they're okay with it. And then a conversation that I have a lot is sometimes we'll get an 80, and then someone says, well, I think that's good enough, right? and I was like, well, you know, 80% sounds like it's pretty good. But
Sure.
I was like, are you okay with your plan failing 1 out of 5 times?
Yeah,
Like,
let's talk about
well,
that.
when you put it like that, we might want to go back to the drawing board.
Now that you mentioned it, yeah, let's run it again. I like that.
Right, and that's taking into account, you know, healthcare risk, longevity risk. Because people, let's face it, people are living longer.
Right.
And I think right now, if a couple's 65, there's a 50% chance that one of them will make it to 95. So really planning for that, you know, longer life. And really how we structure income, it's almost a little bit more like a U rather than just like a straight line.
Yeah.
And the reason that we do that is because we really encourage people to live life. I think that's so important, especially if
love
you worked your whole life, take those vacations, travel,
Yeah.
and really kind of front load all that.
I love it. I
Yeah.
love it. The
And-
you.
And then as time goes on, you're getting, you know, 80s, now
Yeah.
spending goes down. And then as again, healthcare, we know that's going to be a higher expense, so we want to make sure we plan for that on the
Yeah,
backside
makes total
as
sense.
as it goes higher.
What a good strategy. I was wondering, the phone lines are lighting up like crazy, but we have some spots available for folks. Would you remind them what you're offering today?
Yep. So what we're offering is a complete 360 written plan. And all you have to do is call 888-222-4498 to kind of reserve your spot. And also, if you already have an existing plan and you really want to stress test it, give us a call now and we'll go ahead and get that scheduled for you. Again, that number is 888-222-4498.
And that's great. You'll even stress test the plan they've had somewhere else.
Absolutely.
That's
yeah.
fantastic. What a wonderful offer. Again, it's completely complimentary. All you have to do is claim your spot. Take action. You're in control. 888-222-4498. We're going to take a quick break. We'll be right back after these messages.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back, everybody, to 360 Retirement. I'm your host, Paul Gephardt. Again, my special guest, Keith Wiltfong of Capstone Planning. Keith, again, thank you for such incredible information today, helping folks relieve a little bit of those stresses about retirement. It's nice to know they have a vehicle to reach out to and help them getting through it. I wanted to ask you a question, because I think it's the million-dollar question that everybody really wants to know, right? It's like, when can I retire?
Right. Yep. And that's one thing that we always strive for. What we try to strive for is we want to get to a point where it's job optional. So we have the choice if we want to work or not work. So if we can get there financially, probably the biggest considerations that we'll take a look at is anytime someone's going to retire pre-65, the biggest question is what are we going to do for health insurance?
Right.
Because from say 62 to 64 or 60 to 64, health insurance can be extremely expensive. So that has to go into that calculation as far as does it financially make sense. Once you get to 65 and you become of Medicare age, I think then it simplifies that question a little bit from a cost standpoint. But at the end of the day, what we'll kind of look at is how much capital do we need to fuel the dreams that we have, the desires that we have, the travel, or the lack of travel, maybe just that kind of front porch living, right?
Yeah.
Make sure that we can fuel those dreams with the current assets, and then also make sure we can stress test it. So what if someone, predeceases, or what if we live a very long life, or what if we need some type of long-term care or kind of home health care? So we'll stress test against all those scenarios. And once we know that, hey, financially, we're good, we'll use very conservative estimates on any type of investments and things like that. But then once we can kind of check a lot of those boxes, or at least about 90% boxes, we kind of give you that permission slip, say, hey, if your boss upsets you, you can walk away at this time.
Right? No, you've got options, right?
You got options.
Yeah. Job optional. I love that phrase. I think everybody's working for that one. I got to ask you a little bit about the word fiduciary today. Yeah. I mean, it's popping up everywhere. People are using it in ad campaigns. It's unbelievable. It's an interesting concept. Would you share for folks, first of all, what is a fiduciary? What's it about? And why is that important to them?
Yeah, and I think the reason that it's coming up more and more is because it is very important. I think that you're working with a fiduciary advisor. So what a fiduciary is they have a legal obligation to do what's in your best interest, regardless of their interest.
That's the way it probably should
Which,
be, right?
again, it sounds like, doesn't every advisor
Right.
call themselves, you know,
It should be the way it is, I think, right?
Isn't that how everyone operates? And unfortunately, the answer is no.
Mm.
So there's two main standards. One is the fiduciary, where
Right.
they have that legal obligation to make sure that they're doing the best for you,
you. Mhm.
regardless of what's best for them.
Right.
And then there's the suitability. So suitability strictly just says, hey, this just has to be suitable for your situation. Doesn't have to be the best. Doesn't even have to be the best that I have.
Yeah.
So a lot of those, I wish that every advisor had that fiduciary standard, just unfortunately not the case. So we're a fiduciary firm. I'm a certified financial planner, which they're held to the fiduciary standard, as well as SEMA, and then my Series 65 licensing all have that fiduciary standard to our clients. And it doesn't mean that the guy that has it or the gal that has suitability standards isn't doing the right thing. It's just they're not required to do the right thing, basically.
Right. I gotcha. I totally.
So that's a question that I would always kind of say, hey, what kind of basis? Just so you have an understanding of where they're coming from.
Yeah. And and it's really nice to have that little extra level of security for folks in case they're wondering, right? To knowing that there is another governing body that makes sure that you're looking out for their best interest.
Right.
That's kind of nice, right?
Correct.
Yeah.
I mean, I always recommend too working with certified financial planners. Obviously, I'm a little biased because I am one.
Of course.
But we had to go through. I mean, there's 10
Yeah.
courses, a 2-day test, over 10 hours, per day. So there's a lot of stringent requirements for that continuing education. So they're actually, we're actually certified in financial planning rather than just someone that, took a class or went to a course or, did some time in New York or something like that. So I think that's really important. I mean, you would make sure your plumber's certified or your roofer's certified. Why not make sure that your financial planner's certified?
I totally love that. Believe it or not, we're coming to the end of the program, and I just really want to thank you so much for being with us today. But we want to thank you for being with us, because that's what this is about your plan, your future. Not a 340-degree, not a 350-degree, a 360-degree approach to retirement so that you make sure every gap is filled, everything is covered, that you'll realize those hopes and dreams that you've worked so hard for. But the number one thing about change, it takes you. You have to be your change. Make the call today. Take advantage of that complimentary review. 888-222-4498. Thank you for being with us, everybody. Be well and enjoy your retirement.